The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A warm welcome to our special coverage of the German election. We are live from Berlin, from Stuttgart and here in London. And these are your headlines. Friedrich Merz is set to become Germany's next chancellor as the Conservative Union tops Sunday's federal election, whilst Olaf Scholz's SPD crashes to its worst defeat in over a century.
Herzlichen Dank
Thank you for the trust you've placed in us and in me personally. I'm aware of the responsibility. I'm also aware of the scale of the task that now lies ahead of us.
This is a bitter election result for the Social Democratic Party. It is also very important for me to say that it is a result from which we must move forward together.
Alternative for Germany takes second place, doubling its vote count. Despite the firewall excluding them from coalition talks, their leader, Alice Weidel, says the door is still open.
Our hand will always remain outstretched for participation in government. To implement the will of the people, the will of Germany, we are ready to participate in government.
Weeks of coalition wrangling lie ahead, but with just 5 parties entering the Bundestag, the path is clear towards a new grand coalition.
The euro strengthens on hopes of a stable government in Germany as corporate leaders here in Germany call for swift action on the economy.
The Ukrainian President Volodymyr Zelensky offers to step down in exchange for NATO membership as the country marks the 3rd anniversary of Russia's full-scale invasion.
If to achieve peace you really need me to give up my post, I'm ready. I can trade it for NATO if there are such conditions.
Okay, it was an evening where pretty much a lot of the pundits got it right. So Germany's Christian Democrats and their leader Friedrich Merz are, as pretty much expected, poised to lead the country's next government after claiming victory in Sunday's federal election. The latest results put the CDU, CSU union parties on just under 29% of the vote, according to Germany's election body. The Chancellor, Olaf Scholz's Social Democrats, slumped to 3rd place, picking up just over 16%. That is the party's worst result since 1887. The far-right AfD came in 2nd place, taking more than 20%. The party's best ever result in a general election and double their tally from 2021. We will spend a large amount of the next 4 hours on European programming analysing every aspect of this election. But safe to say, at the moment, the reaction from the markets is pretty calm. In fact, one would suggest mildly positive. You have the euro-dollar just putting on just a small amount to the upside, 0.5 of 1%. 1.05 is where the euro-dollar pair is trading. In equity markets, the very early opening calls for Europe show that the German market, as you can see on the right-hand side, just moving ahead pretty aggressively by around about 1%. Germany's Christian Democrats celebrated the election result in Berlin. The Chancellor in waiting, Friedrich Merz, pledged to form a new government as quickly as possible.
Die Welt da draußen wartet nicht auf uns.
The world out there isn't waiting for us, and it isn't waiting for long drawn-out coalition talks and negotiations. We must now become capable of acting quickly again, so that we can do the right thing domestically, so that we're present in Europe again, so that the world sees Germany is reliably governed again. And that's what the Union stands for. That's what we stand for, and that's also what I personally stand for.
Now, the mood was very different across town at the SPD's headquarters. The current chancellor, Olaf Scholz, urged the party to remain united following its worst defeat in well over a century.
This is a bitter election result for the Social Democratic Party. It is also an electoral defeat. I think that needs to be made clear at the outset in view of the result. And it is also very important for me to say that it is a result from which we must move forward together.
And at the AfD's Berlin election party, leader Alice Weidel claimed the far right has now confirmed its place among the mainstream, even as all other parties refuse to cooperate with them. She said the AfD will be ready to help govern if called upon.
Right, so our team of reporters is standing by. Annette is in Berlin to break down the results, and Carolyn is in the country's industrial hub of Stuttgart with all the industry reaction. Annette, so many questions for you. Let's kick off with you as well. Why don't you tell us how you see things after what has been an extraordinary election?
Well, it wasn't very exciting election night, I would say, because when we all went to bed, because of course had to get up very early, it wasn't clear that Friedrich Merz's CDU can, in theory, form a coalition also only with the SPD. Now the question, of course, is how open is the Social Democratic Party, who got their worst ever election result, for a coalition with the CDU. There was one quite known figure, Manuela Schwesig, who was the Prime Minister of Schleswig-Holstein, up in the north of East Germany. She was calling for a vote of every single SPD member on a potential coalition with the CDU, because Friedrich Merz is not very popular with Social Democrats. So there is still a random risk that the Social Democrats are not in favor of forming a coalition with the CDU. But that remains, of course, to be seen, and that also depends on how much or how influential the jobs for the SPD might be. But having said that, the fact that the BSW, the Wagenknecht Party, and the Liberals didn't make it above the 5% threshold enables Friedrich Merz to form a two-party coalition, which is a positive for the country because it makes governing much easier. We have seen in the past 3 years that this three-party coalition couldn't agree on anything and did do a lot of infighting, but not a lot of reforms. So going forward, what is crucial as well from that election result, because the world looks on us here in Germany and especially talks about the lack of investment, and that is because of the debt brake. So the fact that there is no blocking minority, because the AfD only in quotation marks has 210 seats in parliament, is a net positive for the reform of the debt brake, because there is no big opposition to it in parliament which could block such a move.
Yeah, many questions. Let me just start off a little bit more about the mechanisms as well. Producer David, of course, who has German heritage, will just inform me that actually the SPD, despite its dreadful performance, goes back to 1887, actually are in a very strong position because there is no coalition without them as well. And actually in the last Grand Coalition, they had 3 of the absolute key roles as well. So they are, despite this abysmal evening, in still a very strong position to get some influential roles were they to go into Grand Coalition.
Yes, exactly. I mean, they're the only kingmakers, so to say, out there, because clearly without them, there is no possibility to form a majority coalition in parliament. Friedrich Merz has been ruling out to run a minority-run government. That is a possibility as well in Germany, so you could form a government without having a majority in parliament, but that makes your government inherently unstable and unable to pass through reforms. So essentially, Friedrich Merz well knows that he has to give something to the Social Democrats, which makes them feel good about forming a coalition. Most likely that's going to be, again, the finance minister, Jörg Kukies, who has already served as finance minister after Lindner left the last government, is set to stay on, or willing to stay on as finance minister, for example. And we could again talk about other posts, perhaps the defense ministry. Boris Pistorius is very popular. So that could be the new setup, but it's very early days to actually talk about which ministry goes to which party. But the fact is, the CDU has to give something to the SPD.
And thank you very much indeed. There are lots more questions, which we'll answer, of course, throughout the show. Remember, you can follow all the latest reaction to the German election here and online at CNBC.com.
Now let's look at the business angle here. Leaders from across the German industry have called on the next government to do more to support the economy. Carolyn has more from Stuttgart, home to top names in Germany's auto sector.
Good morning to you, Sylvia. And unsurprisingly, the reaction from the industry, from the business community, is one of urgency. Just want to bring you some of the most important statements from some of the most powerful unions here. For example, IG Metall is saying industry and employees do not have months to wait for clear prospects. And industrial companies, especially in the energy intensive industry and in the supply industry, are up to their necks in water. They say the focus should be on competitive energy costs, electromobility, and the ramp up of that, along with the investment in education, roads, railway, and digitalization. I want to bring you one more statement, guys, because the Association of Family-Owned Businesses says without better economic policy, Germany is threatened with dramatic economic and political conditions. And one more line here, deindustrialization will accelerate, the wave of insolvency will become even greater, and the sale of family-owned businesses will only increase. They say we are heading towards a very dangerous tipping point. So the tone from the business community, from industry, Steve and Sylvia, could not be more urgent. Now, we're here on the ground in Stuttgart, the capital of Baden-Württemberg. This is, of course, one of Germany's most prosperous states, also a state that had been driven, and that is still driven very much by the car industry, which makes up roughly 5% of overall German GDP. So, needless to say, no pun intended here, it has been one of the engines of growth of Germany, but we all know that this engine is stuttering. And on the shows, we usually talk about the big companies, the listed ones. We talk about, of course, we talk about Porsche, we talk about VW, we talk about Mercedes. But today we're going to dig a little bit deeper. We're going to be talking to one of the biggest car suppliers here in Germany. We're here at Mahle's headquarters in Stuttgart, and the CEO, he's been very vocal about what he wants from the German government, and that is less regulation and better conditions for doing business.
It is clear what the business community is asking for, Carolyn. You just highlighted some of the comments there. But what I'm trying to understand at this stage is whether the outcome that we have from this election is going to deliver for the business community. Is there a sense that this election is actually a turning point here for the struggling economy of Germany?
At least that's the hope here. We know that the car industry, for example, is dealing with a number of challenges. That's overcapacity in China, weak external demand, specifically driven by China. And then let's get back to regulation. There has been the ban on combustion engines by 2035. The auto industry very much hopes that this one will be reversed. But then there's the big elephant in the room, and that is the potential tariffs coming from the US. Of course, this industry and industry overall in Germany, they've seen tariffs before. So are they more used to it? Are they more resilient to that? That remains to be seen. But I think really this should be and will likely be an important turning point for German industry in terms of lowering energy costs. Of course, the outcome of the Ukraine war will also be a very decisive factor in lowering some of the input costs like energy prices as well.
Absolutely. We'll speak later in the show, Carolyn. We'll have much more discussion, reaction out of Berlin and across Germany this morning. Later this hour, we'll be hearing from the former U.S. ambassador to Germany, John Emerson. That's coming up at 6:30 GMT.
Right, as I showed you earlier, the opening calls for Germany, which is where the action is, of course, look incredibly positive if you are long the market. 251 points higher is where the German blue chips have been called. We'll keep an eye on this up to the open in just under 2 hours' time.
Welcome back to the show. Let's get a check on opening calls as we prepare to see how markets will react across the European equity space later today. They actually suggest a positive start to the trading day for most of the bourses. Of course, we're keeping a closer eye on what's happening over for the German DAX, also called higher at this stage, as of course we are digesting the results of the election. With that in mind, The Christian Democrats and their leader, Friedrich Merz, are poised to lead the country's next government after claiming victory in Sunday's federal election.
US equity markets sank on Friday with the Dow notching its worst day of the year so far and its worst week since October. The Nasdaq led declines, down more than 2% for the session. This as services PMI came in under the 50-point threshold that separates expansion from contraction, with companies citing uncertainty around the Trump administration's policy blitz. The difference, it's pretty stark actually. In the space of a month, the US has gone from the world's fastest growing major developed economy to apparently on the cusp of stalling, expanding less than Japan and the UK in February. Now, S&P Global said that the PMI print suggests only 0.6% of annualized growth in February. That's 75% down on the 2.4% growth signal for the fourth quarter. That uncertainty is hitting the consumer too. The University of Michigan Consumer Sentiment Index sank nearly 10% in February to just under 65, whilst the survey's five-year inflation outlook came in at 3.5%. That is the highest in 3 decades. Investors moved into treasuries following the data, with the 10-year yield down almost 10 basis points. So you can see there 4.431, albeit in a fairly stable range. US futures, so let's take a look whether there's any recovery being called in. Of course, European markets are called higher, certainly on the back of the German market, and their relief, I guess, at the CDU potentially being able to form a government. US markets called up around about 0.5%. Sylvia, lovely to see you, by the way. We have a frenetic day where we are absolutely German focused as well, but it's very important to try and digest what happened on Friday. So no doubt about it, it seems very clear this wasn't about corporates, this was about concern about the economy under Trump. And of course, Mr. Trump has set his stall out by making America great again and by putting a lot of effort into supporting some form of protectionism, tariffs, a trade policy which supports US companies. I mean, that's what he said he's going to do, but the market seems unconvinced. The market, and I think you've got some amazing statistics, has been underwhelmed since Trump got in, and compared with European markets. And I won't steal your thunder on that, but it's very interesting data. But there are three things we need to look at here. Is one, how the corporate's doing, two, how's the economy doing, three, how's the market doing? And they're not all the same thing. Market's clearly lost a bit of momentum, and it is very much on tenterhooks about the corporate results, which by and large have been really solid. We have got Nvidia coming up, and that's going to be an enormous focus to see whether the poster child of the rally can continue with these quite extraordinary figures and beat the whisper number as well. The numbers are going to be spectacular, but it's about the whisper number as well. So that's the market as well. Can it regain its momentum as well? The actual underlying economy, despite the data we saw on Friday, still remains relatively robust. The employment data remains strong, but it's future inflation expectations where the concern is, and the lack of support from interest rate cuts out of the Federal Reserve, which people are beginning to question. Now, I know the futures market put on a bit more excitement about potential cuts going forward into 2025 as well, but that still remains seen from what we saw from the most recent Fed commentary. A lot more of that coming this week. You've got some interesting statistics.
I do, and actually I'm just wondering at this stage whether we are witnessing a bit of a reality check from markets, because we have been talking about the inflation perspective for a long time now, whether this could be the defining narrative for markets this year, and at the moment that is the main market concern. But let me show you this data, because indeed if you look at the performance for US market since Trump got in office in January of 2025, look at these figures. We are mostly down across all of the major indices. We're only seeing a little bit of green for the S&P 500. We're up 0.3% over this period. But even more interesting, in my opinion, is let me take you to other markets outside the US equity space to show you how the performance has been since Trump got elected. And here, look at Europe. We are up almost 6% over this period. A lot of upside for European equities. Some of the reasons behind that has been the fact that we haven't actually seen tariffs implemented on European economies. On top of that, of course, considerations as to whether we're going to see a ceasefire happening in Ukraine as well. That could also be a boost for European equities, particularly when it comes to energy prices too. And of course, also some market players suggesting that the economic perspective, the economic outlook is not as bad as they feared. So that has actually boosted European equities over this period. The question is, will this actually continue going forward? And of course, here we have to keep in mind the dynamics and the comments from Donald Trump. There's expectations that sooner or later there will be more of a trade conflict between the US and the Europeans. But on top of that, I want to talk about defense spending too. That has actually boosted European defense stocks recently, with the expectations that countries across the continent will be spending more on defense. But of course, where do we go from here? Will that narrative be enough to push European equities going forward? It remains to be seen. And of course, the other element here, Steve, is the fact that, in contrarian to what we're expecting from the Fed, the ECB is on a rate cutting cycle. That is the expectation. It's a lot more aggressive than the Fed is. So let's see how this is going to play out. But the key question here for me, from a European perspective, is this likely to continue?
Yeah. I'm not calling Europe as a victor over the US on equities. A lot of people have lost their shirt on that trade for years. But let's look at the evidence if we stand back. One, as you just mentioned, Europe is on a clear rate cutting path. That appears to be the case from the ECB. That's what we can garner at the moment as well. Two, the US, we don't know what their rate cutting path is. So the cost of money in the two jurisdictions is one area. Two, we actually don't know the benefits for American corporates of Trump policies. We hope for American corporates they work out very well, but we don't know it's going to work out well. The sentiment indicators, whether it be PMIs or Michigan sentiment, shows that people have a degree of concern about what are very, very different set of policies as well. I'm not here to knock Donald Trump's policies. I'm saying there is uncertainty about them. So on the interest rate front, there is a clear differential. On the policy front, well, we think that Europe is going to get its biggest economy really galvanizing with regulatory reforms and fiscal reforms as well, whereas we don't know the certain path of that situation in the United States. So that's two areas, money and fiscal, in fact, three areas, and structural as well. The fourth area as well is actually European equities are trading at historic, despite the rally we've seen, historic discounts to the US as well. So you get a valuation discount as well. And again, I want to emphasize, I'm not here to be a flag waver for European equities. It's not my job. But my job is to point out, A, the differential, and B, what could be the momentums from those various aspects.
We're just highlighting the facts here. I think the other wild card here is actually what Donald Trump is going to say, because we know that he is very prominent when it comes to US markets. He likes to see a bull market, and he's very favoring of that. So now I'm just wondering at this stage whether perhaps, the pressure we saw last week could actually trigger a little bit of a change in Donald Trump's perspective and his policies and what he says. We know most of his policies have been, inflationary. That's the outlook. But could he change a little bit of that if we see pressure on US equities?
We are in Europe part of the US post-Second World War ecosystem, the multilateral organization set up by the United States in the late 1940s. Europe is a willing paid-up member. If the United States government wants to destroy those multilateral organizations and go to bilateral and change the global architecture, which it appears to look like that might be part of the case. And again, I'm not here to judge those policies. What does that mean that Europe will do? Europe potentially is losing its security guarantees. It's potentially losing its close relationship with the United States. Europe has to galvanize itself. Absolutely clear. It seems very clear from J.D. Vance's speech and from Mr. Trump's protestations that Europe is a foe akin to the Russians and the Chinese, and which seems extraordinary. Then actually Europe could be pushed out of the US orbit and into more of an independent orbit, or dare I say it, into trading relationships with others around the world who are finding growth areas, whether it be China, whoever it be, whoever. So if that's the stated aim of the US government, then so be it. Europe needs to seize this moment. My goodness me, we know Europe needs to seize this moment because, again, I'm not here to tout Europe as well, but it has a multitude of enormous problems. Maybe 100%. What Trump is doing on both the geopolitical and an economic front is actually a very good thing for Europe because it finally takes responsibility.
Absolutely. We're going to hear actually the European leaders gathering in Brussels next week for an emergency summit. Let's
Another
see what they will
emergency
say.
summit.
I know. I'm
Isn't
actually very
every
excited about
summit
that.
emergency summit?
Not really. No. This one is.
Okay.
There's scheduled meetings for the year, right?
And
whatever they do beyond that is an emergency.
Should be an emergency summit because the crisis is there.
Yeah, no doubt. And they seem to be realizing that. But let me also tell you what's been happening in terms of Berkshire Hathaway's their latest results. In terms of their cash pile, it has actually surged to a record high, topping $334 billion at the end of the fourth quarter. But Warren Buffett reiterated his desire to continue to invest in equities. The Oracle of Omaha didn't outline why he hasn't made any major investments recently, but stressed his preference would always be to deploy capital into stocks. Berkshire's results were boosted by its treasury holdings, but Buffett warned against fiscal folly, saying the value of paper money can evaporate if poor fiscal policy prevails. Exactly to your point earlier, Steve.
But the point is, yes, he's got a big cash pile.
Yeah.
But he's still stunningly invested in equities.
Sure.
I mean, it's like this when, oh, I'm underweight, or I'm overweight, or I'm accumulate, or I'm pull back a little bit, or I'm market weight. You know, a lot of analysts and market strategists use that as an excuse for saying, oh, well, we're more cautious. The fact is, Warren Buffett has enormous exposure to the stock market. He is still enormously invested, despite the fact that the cash pile, which is doing perfect. I mean, let's add two things together.
Yeah.
He can earn a vast amount of money on that cash pile, plus the fact there was a Goldman's piece late last year that said the potential returns from the US stock market over the next 10 years could be just 3% a year. Well, if he's earning over 4% on US treasuries, and the returns from the stock market are only going to be about 3% as well, it makes total sense.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.